Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Presently, the Australian dollar remains in a bearish trend, extending its decline now for 7 consecutive days after breaking the key support level of 66.80, now crushes the 60-day moving average and gives some concern to the downside. With the ADX trending to the bear case, one takeaway is the RSI is extremely oversold and therefore keep an eye on this level seen around 66.35. As if we do see a bullish return, it could see a recovery back towards 67 cents as initial target. But overall, the bears are getting somewhat a little bit tired due to the RSI being oversold, so let's see if we can get a bullish response as the dollar index, which measures the greenback strength against a basket of 6 major currencies, was flat at 104.30. With the local economic calendar light, this week's main attraction will be the release of the core personal consumption expenditures, or the PCE, price index, which is the US Federal Reserve's preferred inflation measure, and the release is on Friday. Looking to the euro, the market was a little bit mixed, but nevertheless a slight recovery. Let's put the upward play towards the region of 109.35. If we do see a break there, I do feel that there is now a potential to get further gains as the RSI has backed away from the overbought conditions and is now flirting with the midway point at 50. Let's see if the market can show some dynamics and therefore look further. That is towards 110.0515. Any pullback, I view the support area around 108.35 to 65. The technical pattern is now resuming back to a bearish case when we look to dollar yen and looks towards a support level of 156.15. Overall, let's see if we can take out this level of 154.7090 because no safety net is seen until around 150.5. A big level, so if 154.70 breaks, I do anticipate a round of stops to trigger the move. With the recent upside attempt failed, around the level of 157.8090 should continue to cap. The British pound is holding well at this stage and now looks for a potential rebound since the 2-day sell-off is now slowly diminishing and therefore could look back towards the topside target around 130 and with the weekly time frame still around 131.5. Any weakness, I do anticipate support around 128.80. Turning to commodities, we can see the gold is still somewhat mixed as it now idles around 2,400. However, with the bullish celebrations for spot gold slightly fading, I think they may come back and therefore could look for a bounce back towards the region of 2,450 and maybe onto 2,500. I don't want to get too negative here because I feel the market can respond back to a bullish case and post fresh highs and move back into uncharted territory. But it all depends on the close, as a close beneath 2,400 in New York will somewhat disappoint the bullish case and may see it drop back towards 2,350 as initial target. Wrapping up with oil, the downside target of 77.40 was stabbed at and was respected, and now maybe due to the bullish divergence here could see a recovery through $79 and maybe back on towards $82 a barrel. With the downside respected, demand could overthrow the bearish case and therefore snap this 3-day decline and overall expect a recovery. In the event we see a break of 77.40, I see a little support until around the region of $73.60.80. Well, that's a wrap. Thank you for joining me. And as always, look out for the intraday report and I hope you enjoy the great start of the day.